Hello, fellow traders. Curtis from Beyond Backtesting here, and I'm pleased to share that I've passed my second Apex Trader funding account, and so I've passed 250K accounts. And I wanted to share, if you're going into this process, I want to share some of the lessons I've learned and some of your expectations going into this. I want to share some of the tips, some of the things I've learned, and I know I'm going to share my plan going forward. Before we get started, please read this risk disclaimer in its entirety. Futures trading is risky. Don't trade with money you can't afford to lose. Hypothetical performance results are just that, and subject to inherent many limitations. This is my personal opinion only, and should not be considered as investment advice. So let's get started. Let's start with this perspective that you're considering going one of these trader trials. The first thing I'm going to suggest is do not expect to pass on the first time, or do not expect to pass without resets. So don't set the bar so high, and if that is you want to treat this as a process. If you go into this with the mindset that you're going to you're going to do it one time, and if it don't work, you're done with it, you're probably not going to pass, and it's probably going to be wasted money. So it goes with this, is treating this as a process that it infers that what you get back in terms of your funding compared to what you pay in terms of your expenses is going to be variable if you get funded at all, because not everybody will. So that also goes to valuing this as a process. You want to value this as a process because if you just look at the money you get back, and let's say you end up paying in $2,000, you get back $2,000, you may be unhappy, or maybe you don't get funded. So, and it's not realistic, right? You want to have realistic expectations. You're not going to pay $100 and get $2,500 of funding. You may pay in $1,000. You may be able to do this over time, and your total fees might be $1,000. You might get $2,500. So a good goal would be 50%. This idea you could treat it like a desk fee. Sometimes I think about like a desk fee where you're paying a set amount a month to trade, or you may look at like, you'll pay in you might pay $1,000 and get $1,000 in funding. I can share that overall I'm net profitable in the operation, and so to speak, or I've got back more money than I paid in with these two funded trader accounts. So I am getting I am getting funded, so to speak. I'm actually getting funded compared to what I would have if I just took the money I paid in and just traded it. I'm getting back more than that. So, and don't, going with this idea of the process and all, don't expect to pass the first time. It's not likely. These can be very difficult trials, and even for very good traders. You want to look at it as a process that you're going to commit to for a length of time that's up to you. But I would suggest being willing to commit at least 3 to 6 months to this process, and to commit a sustained effort, right, to this whole endeavor. You want to plan for different scenarios, different outs. So as I've suggested, this level of trading is not for everyone. It's doesn't mean you can't trade, but it may mean you need to trade a different way. It may mean that you want to go towards system trading, or it may mean that you can trade, but you just need you need more risk or a different set, do it in a different way. So plan for different outs, plan for a different scenario where if it doesn't work for you, what you will learn from it, how you will proceed, because that is a possibility. I'm going to suggest I'll put this in, I guess this all goes together. Yeah. So I'm going to suggest if you do this, plan to trade multiple accounts. And that goes also if you can get multiple accounts funded. The amount of funding you get from one account for a futures trading, it's a very small amount. It's $2,500. Now, I've did previous videos where I showed the 50K account. It's more similar to like a 10K or a 12K account with a max $2,500 you're risking on that total account, maybe even less. There's going to be value in trading multiple accounts, which I've talked about in the past, but there's also going to be value in passing multiple accounts. So if you can, I'm going to suggest that you always have at least 2 accounts that you're trading. It's going to make it It's just going to allow you to give you more flexibility. And it's a great way of also getting back more value based on what you pay in. However, that said, trading multiple accounts will double the expense. Will increase the expense. So don't pay more than you can afford to lose, or jeopardize your financial loss. So I've speak in the past about who I thought trader Tryouts were for, and I've always suggested to always have a savings before even attempting this. Make sure you've built at least a savings. When it goes to the risk, if you reset your account don't trade it the same day you reset it, because you're just increasing your risk. I did that. You reset it. You fell. You blow it out again, and now you've got to reset it again. Then it's increasing the risk, and sometimes you might have actually lost more than you would have, as much as you could have with trading with your own money. So you want to have rules. You want to define those rules and create some. It's kind of tricky because you need to give yourself enough room to fail and not treat it too seriously in order to pass. But at the same time, you need rules so they don't get out of hand. So I'm going to suggest you figure out what works for you, but I would suggest not to reset, max reset one today. You might go to one reset per month. You just have to decide, or you might set a baseline budget. Another way, like I talked about the trader desk fee, I looked at it like a desk fee where I'm willing to pay up to, maybe $400-$500 per month. And that's my budget. And that's a lot of money, but it's, traded desk fees are, if you ever know about professional desk fees, those were expensive too. So, and I can share that I did get back quite a bit more, substantially more funding than I paid in. So even with all the fees, of course, my experience is unique. So if you reset less, you can do it with less risk. If you trim the simulator, if you want the minimum risk, just one reset per month, and then go to the simulator. You still get the data. You can still trade. You can still work on your trading. So you can choose how aggressively you want to try to pass these trials. But you can, if you choose a less aggressive approach, then you can really reduce the amount of risk you're taking in terms of the money, in terms of the amount and get back a bigger return. It may take a little longer, but you can do that too. So let's talk about, now that you've decided you want to do this, you've determined how you're going to do this. I want to talk about what's worked and what has not worked, and some tips and things. So macros. Now, macros is a tricky question. If you're because I put up some good, I've managed to put up some decent winning days with macros trading in the AMP. So I want to be clear, you can be profitable trading macros. However, and trading macros, you can put up reasonable days. In my personal account, I put up $200-$300 days trading macros, with maybe on my risk, maybe $90. So you can trade macros. Macros are a great thing. However, for Tryouts, I have found that they don't work so well. Keep them, for one reason, is that you're already reducing your risk through the tryout process, and macros have a higher trade cost. So I'm generally going to suggest the minis. You're going to really reduce your trade fees, and you're going to be able to pass faster with the minis. You just take a little more risk. It's not real money anyway, and so I'm going to suggest to trade with the minis. Now, it's real money, but you're not risking the full amount, right? So if your method, if your method requires macros. If your methodology requires macros, fine, trade the macros. Just understand the fee structure. In my personal account, I traded with AMP. It was like 84 cents, I believe, per round. I had very good fee structure. The Tryouts will have their own fee structure, probably be more, but understand that fee structure and just make sure it's not going to be a problem. But yeah, if you're putting on those 5 macros because you don't want to take the full risk, just take better trades, put on one mini. That's what I'm going to suggest. Now, if you're trading macros because it's part of your game plan, that's a different matter. Speaking of macros, in my personal account, don't get lackadaisical with the risk, because with my real money, I've run up some really big losses getting into a trade with a macro, not even a real trade, and just letting it run against me and averaging down and stuff. And you have a big loss. You're like, how did that happen? because when you trade, it needs to be serious. It's just so many times you get into the market. Speaking of that, finish line problems. My first week of doing the trials, I had 3 accounts that were very close to passing the $200, and I blew them all the same day, which is ridiculous because $200 is a that's a scalp. It was ridiculous, but it comes. There's something in the hiking or mountain climbing community known as summit fever, where people lose orientation as they get near the goal line, and that was something that's been impacting me. In my worst case, you never over this, so you have to. It's always a thing. In my worst case, just recently, I was within $10 of passing, and I said I'm not going to do what I normally do. I'm not going to go in there and I'm not going to trade a bunch of contracts, and I'm going to go to the micros, and I'll just take a small scalp. Well, I took a small scalp, I lost. Took another small scalp, I lost. And the day's 422, and yesterday was the day we had the close. I said, well, I'll just let it run against me, and then I'll average in, and now I might risk $100, but it'll be, that's not how I trade. That's not my trade setups. Ended up taking to make $10 on the account. Ended up losing $1,500. So that was a great lesson for me because it's not what I was not doing my trades. If you, I was just trying to put up a scalp to pass, and if you are near the goal line and you put up good numbers in a day, shut that account down. Shut it down. That's what I'm going to recommend. Shut that account down. Take a breather. Take a break because it's just so easy to swing when you're near the goal line to not make good decisions. And so you want to shut that down. Allow yourself to be in that situation at least until the next trading session. Shut that down. And it goes with that for those who trade. What goes with that trading methods, big wins. For those who trade, you understand that big wins are often followed by big losses, and big losses are often followed by big wins. And if you're trading a methodology that has a small edge and you're using your money to trade that method, then you can, overall you might make money off of a series of big wins and losses, but you're still be up. But that's not the case with many of these trials because of the trailing drawdown. You're never up. So what that does is if you go through the normal trade process of big wins and big losses, you're going to blow out. And so for these trials, you can never feel like you're up. You always have to be watching that trailing drawdown. You always have to never feel like you're up, never get ahead. Don't change your risk just because you're up. Again, I'm going to suggest take profits. If you're ever in a trade $500, it doesn't matter. And this is something I've changed myself, and for better or worse. But I used to always try to do the optimal thing. I didn't care if the trade said I should do this. I don't care what it is. Okay, this is a game. Okay, if you're up and you're $500, you don't know what's going to happen, and you've got multiple contracts on. Take some off because if the trade don't work out, you're going to be pushing that trailing drawdown against you. So you got to be taking profits. Sometimes you do things that are not the best, and sometimes because in the line you're passing, right? You're trying to pass. So rules. One of the things that I believe that most professional traders that separates a professional trader from an amateur is professionals have objective rules. They have, even if their steps are not programmed, they trade an objective way. They use things that are objective. Now this is tricky for me because much of my ability came from tapering and intuitive trading and intuitive ability, and that can be part of it too. And that's a big thing that great traders have too. But without objective rules, it's just not going to be possible to attain the level of consistency, in my opinion, to be able to pass these setups. You need those objective rules. And the difficulty that I found is how do you combine that ability to read markets, which is often some kind of discretionary hypothesis. Okay, the market's bearish because we're hoping below this level or because we broke this support. That is part of your methodology, and that's some of the difficulty. But I look for program setups. I need to program more of my setups. I've added voice alerts to my setups. Big thing that's helped me. I added the voice notifications to my trade setups. Sometimes you miss a trade setup because it's not you don't get a voice alert for it. And so that's been a big help. I think is having those objective rules so you really know when the environment is conducive to your type of trading. Because with that, again, I've been developing the methodology that I'm using. So you want a playful mindset. You want a mindset of us as a student of the market and not thinking like so many traders question why they lose or overanalyzing things. You're developing your method. If you're doing this trial process, you've clearly not proven it, or you would not need it, right? You would probably not need the Tryouts. So that's what I look at it as I'm developing my methods. I'm not surprised, even though I have 10 years or more of trading experience total. I'm not surprised when the market surprises me, because I'm developing my methods. I'm developing what I'm doing, and that goes with this whole idea of that it's a process. If you have this idea that you're going to take something and see if it works, you're going to fail at it. You have to. Trading is not that easy. You're going to have to make it work through your skills, through your process. So you're developing that process, and you're making it better, right? That goes to that whole point. Trade size. This is a very complicated, difficult position. Trading multiple contracts. Gets really difficult, because this is where I have some questions myself. What I will say is I've had my biggest losses in my real money accounts, my personal accounts, when I don't size, and usually when I've blown an account, a trial account, because I was full sized on it. So when you trade size, you increase your risk of blowout. You increase your risk of, and they give you, with these trials, they give you plenty of room to hang yourself. They give you 10 contracts on the 50K. I believe it's up to 10 contracts, which is huge. However, I will say that much of the skill of the professional trader may be in being able to manage and trade multiple contracts and maximize those edges they have. So this is tricky, because if I look back at what's really allowed me to pass, it's been able to trade size, multiple contracts, and knowing what my size limits are and being able to push it right to that limit is really what's allowed me to pass, with my objective entries, with my ability to read markets, of course, is part of it, but also with the rules, my objective rules, and that being a trade size. If you think about it, these Tryouts, they give you these contracts, and that's part of the value proposition is, hey, can you trade 10 contracts? Can you trade 17 contracts? It's not something you might want to do, even if you have a personal account that you would want to do in your personal account, and you can see that you could take a scalp. And this is one thing that's a question is a professional might be taking a scalp that you took, that you were just sitting there trading and not developing your methods. You took that same scalp for $50. There's somebody out there, some professional who specializes in that scalp, took that same scalp with 10 contracts, just made his day and is done for the day, right? So this is tricky, because when you trade size and you don't have the skill, you increase your risk of blowout. And even if you do have the skill, you're increasing your risk of blowout by a large margin. However, if you can learn to trade the size, if you can work for it, if you don't want to stay where you're at. If you're a 2-lot trader or 1-lot, you don't want to stay there. You don't want to stay that 2-lot trader. You want to work and develop your methods so that you can become a 3 or a 4 or a 5-lot trader. So what I would say is just simply, you don't need to use all the size they give you. I've found myself personally, I can trade with my methods today. I can trade up to 3 contracts, and sometimes up to 5 contracts. But if I put on 10 contracts, I can trade that. Almost always going to blow out. So I just know where my limits are, and I'm trying to push those limits. That's part of the thing. That's part of the challenge. But this is a question on my mind. This trade size is something I would be interested in hearing your feedback on trading multiple contracts, and how that works with the value proposition of these trials, because they give you 10, and even the 150K account, which I'm also trying to, if it's 17 contracts, and you can see you could turn a little $50 scalp into a $500, $1,000 trade, and I know that many futures traders want to work for trading size, but I've also shown recently without trading huge size, just by being consistent, trading multiple accounts, you can put up good numbers. And this is where I'm not sure, in my method going forward, we're talking about my plan now, this is where a little bit of something for me to work out, because we'll talk about that in a moment, but my plan is basically to trade, we'll talk about now. My plan is to pass 5 to 6 accounts, and by doing that, I can risk as little as I can make $500 per day, risking only $100 per account, which is like 2%, 3% risk, maybe 4%, but it's very modest risk on the account. Even though these are very tiny accounts, as you know, if you have 5 accounts, it starts to multiply. And if you do that, based on my estimates, you could take one of this. You could take this to like $50,000 to $100,000 maybe within a year, based on my analysis. So you don't need to make shoot for huge gains. However, the that doesn't really allow for the size, at least not initially. So that's the question on my mind: is do I want to try to work to build a trading size? And but the risk does increase, and it's a question. It's a question I'll have to figure out. But if you're going to trade size, I'm going to suggest try to build up your size. Work on the replay, work in practice, work in sim, and learn where your limits are. Because it's a great, it's kind of smart on their part. They give you enough size to hang yourself. However, if they find a trader who can trade size, then they're going to make a lot of money off of that trader. They can tend to make money off that trader if there's these professionals out there who can trade size. So it's really smart on their part, because that trader may not be wanting to trade that size in their account, and they can make a lot of money for them. And also the person who doesn't know how to trade size, they're going to blow out. So it's a win-win for them. For you, you just need to know where your limits are, and if you want to work to trade more, you need to prove that out in practice and simulator before doing it in the tryouts, or else you're just going to likely just blow out. So that's on trade size. And again, I'm interested in your opinion. Are you working up to a certain number of contracts, and how does that work for trading multiple accounts? Because I've seen with multiple accounts, you don't need to trade a lot of size. The problem for me is that much of my skill is in trading size and having the objective setups and trading size. Managing the trades, all that's part of my skill. And so I'm like, if I can't, how do I work on that if I'm just hitting my targets real easy, trading multiple accounts? That's the question. One thing you want to do is be aware of your trailing drawdowns. Be aware of how Rhythmic works, and learn Rhythmic. Learn the R Trader. Learn the software. Be aware of your accounts. If you're especially trading multiple accounts, if you have an account that's passed, you don't want to accidentally choose that account that's passed and blow it out. So speaking to that, you can also use Rhythmic liquidation, and you can say on your account, you can set it to liquidate or set a risk limit. If you've passed an account, this is what I've done, is because there's a risk, I could go select that account, put a big trade on it or trade and lose that trade and be under the limit. So what I've done is I put once you've passed, put like a $25 or $10 limit on that account so that you don't fail it by accident. Be aware of where you are in relation to your trailing drawdown. With the Rhythmic question of liquid, as well, the nice thing about Apex is they don't require that you trade any certain way. And I think this is a great thing. And one of the reasons I signed up for Apex is because they said, look, if you've passed the profit objective, you just trade 10 days, you pass. We're not looking for any type of performance, and even they said, look, just trade the micro, just scalp one micro contract per day. So what I would recommend is once you've past the profit objective, just to scalp. You don't have to take real trades, just scalp, scratch a trade, so that you make your amendment. That's how I'm treating it. And use Rhythmic, set your liquidation level in Rhythmic to be aware of your accounts. This is the point. If you want to be aware of those accounts, be aware of what account you're trading. It's easy to get lost if you have multiple accounts to say and choose the wrong account or choose the wrong risk and do something that would cause you to fail. So one thing I'm doing is setting that, being very aware of the accounts that passed and putting that risk limit. And all I'm going to do on those accounts, no real trades. I'm taking one micro scratch to meet my days, and that's how I would recommend for anyone to approach it, because this is just it's just business. So you don't want to trading is risky, and no matter how good why would you nobody's watching. This is the thing, is that some of us have this mindset of developing our performance, and I'll do that in the simulator. Develop your performance in your simulator. Don't be just trying to push it up to see. I mean, there's people do stupid stuff, right? And it makes sense at the moment that, okay, I'm developing my performance, and that's not. This is it's kind of a game. It's kind of a business. So you want to treat it that way. So that's I think that's all. Again, let me know what you think about trading size versus multiple accounts, because I've shown if you get some, my plan has been trade multiple accounts, but at the same time, I do see value in working up the size. I've been able to work up to 5 contracts, and if I'm trading the size, I'm going to be putting up a lot more than $100 per account, and it may be a combination. And I'm thinking that what may be is that allow myself to trade. Maybe allow myself to trade size of one account, or maybe I just allow myself to add one contract when I'm confident. This is a question though, because that is a lot of the value proposition. But once you trade size, your risk, you can't control your risk the same way as multiple accounts. You're trading size. That's a good question. That's a good question, and maybe a combination that works. But it is a good question, and it's one of the value propositions. Just to not to belabor this too much, but if you can trade with 10 contracts, if you can get the skill to trade with 10 contracts, a little $50 scalp, that could be a living. That could be a living there, one little scalp, and if you can find that one little scalp where the probabilities are very high, and it's something that it also increases the value proposition of the prop funding, because when you trade size, if you make a mistake, you have a data feed problem, you have anything go wrong, you risk losing big money if you're doing that in your personal account. And so you have to really know your setup. You have to know what brokers to trade with. And there are some brokers, there are some setups that if you try to do that, you would be risking, would not be advisable, right? So you really have to know your setup. Whereas doing something that's prop trading, you're taking some of that risk out for trade size. And so I may do 2 plans. I may do one plan where I try to build my size. I may do another plan where I just take the trades and I just replicate them, or try to trade with multiple accounts. I've got to figure that out, but I do like the idea of trying to build up my size. Right now, I can trade up to 5 contracts without. That's the kind of max I can trade, but getting better at that. Now, there is something to be aware of when you trade multiple contracts. It's something else, a risk-free illusion, which is the idea that you can trade without risk, or that you can manage the risk when you really can't. And it's very easy to become susceptible to that. You have to know when you can trade that size and what conditions you can do it under, and still allow for being wrong. So it is a tricky thing. But when I look at what has helped me to pass, my ability to trade, I've really increased my skill in trading more contracts, and that's came to a lot of trial and failure. And I've really increased and especially knowing my limits. Like the first week of Tryouts, I was putting on 10 contracts that come within. They would get my stop within a tick. It was like the market was out to get me. Seriously. And it's like if I hadn't got that one little stop out to the tick, I would have passed in that one trade. And from that, I tried to work down. I kind of learned that, okay, 3 to 5 is about where I'm able to trade. But the question is can I work to trade more contracts? Obviously, they give you more contracts. They're going to give you 10. Can anybody trade 10 contracts? Are they trading different? I'm trading the ES, but they're trading different markets. But I'm really interested in this topic of the size. And if you've passed, and if you're trading size, or maybe it's just certain markets that don't move as much. It's a fascinating thing, because you want to work up to be in 10 lot, and they give you 17 contracts with 150K. Quote, which is a 5K account. You trade 17 contracts on a 5K account is pretty crazy. Okay, that's enough for now. Hope this helps.